Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. I'm your host, Dylan Silver, and today on the show I have Clay Sheffrey. Clay is in the mortgage space, and I'm excited to have him on here. We're going to talk about how people can really have an opportunity to experience homeownership and save in ways they might not otherwise thought of. Clay, welcome to the show.
Thanks, Dylan. Happy to be here.
I always like to start off at the top by asking folks how they got into the real estate space.
Pretty simple, really. I was in college here in San Diego. I worked as a bank teller, so I was always just exposed to money and people walking in. And in the 1999-2000 time space, I see a lot of real estate agents or brokers that would walk into the bank and they'd deposit their checks. And I would look at the numbers on those checks, and I thought, heck, that's a business I want to be in. Compared to the gas station attendant depositing coins and dollar bills, I liked the checks that had multiple commas in them, and so I just gravitated towards real estate and loans in general. Got a job off the teller line at what would be called a fly-by-night broker back then, somebody who worked out of his house and could do it all. I was his only employee, and trial by fire. And it was a great experience. Not the best, but I learned a lot, and it got me to where I am today.
And so at that point, did you decide to become a loan officer?
No, so at first I thought just real estate in general. I just wanted to learn, and so I got my real estate license back in 2000, and I studied for it, but never actually got my broker's exam. In the end, ultimately, I gravitated towards the numbers. I tell people all the time, like, real estate is a lot. It's a lot of emotion. It's a lot of facts. It's a lot of opinions. And for real estate agents, they have to deal with a lot of emotion, feng shui, and I want this and I want that. Me, I just deal with numbers. Numbers don't lie. And if there's a way to make the numbers work, I can figure it out because I'm pretty good at math.
So then you have this opportunity. You mentioned getting a job out of the teller line, kind of trial by fire. At what point did you get into lending?
So like I say, he did it all. So he was doing both the real estate and the loans at the same time. You could do that back then. And he basically made me his processor. And he had really grand ideas of building some really large company. And he was kind of ahead of his time. It just never got to that point due to organizational problems or whatever. But he made me his loan processor. So this was back when you would package loans in paper packages, and you would drop them in the TDS box to go off to the lender. And you could actually go and visit loan offices and talk to underwriters in person. So I was doing both the whole time. And then, like I said, I just gravitated more towards the lending side of it because I felt there was more opportunity. Refinances are always around. There's refinances and purchases. And so I've seen those cycles, come and go. And it just made more sense for me and what I felt my strengths were.
And what year was this?
This was 2000. So I graduated, or 2002, I should say. So I graduated college 2002, got into the business right then and there, bought my first house in 2004, 100% financing, 80-20, had a pulse so I could get a loan.
Yeah.
Had a picture of a taco truck to prove I was self-employed, all that good stuff. So it was a
Different
fun time
time.
back then.
Where was that first home? Where'd you buy that first house?
Claremont, San Diego.
Claremont, San Diego. Wow.
Yep.
So that's a different podcast, but the mortgage space back then was a totally different landscape, wasn't it?
Oh man, it was. Like I said, because I was talking to the lenders and you had 10 or 12 different people that would always come and try to get your business and subprime and all that stuff. And so you just kind of I basically learned like, okay, if you could get your FICO score above 740 and you could have your CPA confirm in a letter that that you filed a Schedule C. That was all they had to do. Filed a Schedule C, meaning you didn't have to say what was on that Schedule C. You just had to confirm that you filed a Schedule C. And as a bank teller, I also was a notary. And so for this guy that I was working for, I would do all of his notary signups for his loans. And so I was his processor and his notary, probably a little bit of conflict of interest, but that notary business was my self-employed business. And so because I could tell the CPA filed a Schedule C, and she was like, yeah, I'll say you filed a Schedule C, that was documentation enough to do a stated income loan and get 100% financing for $400,000.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Man, I tell people this: if you were able to buy a house, if you had good credit, or even sometimes not the best credit, but if you had the ability to buy a house back then and you didn't, I feel bad. But things are a little bit different now, aren't they?
Absolutely, yeah. 100% finance. And I always say, I'm like, people talk about house hacking all the time. Oh, buy a house, rent the rooms, this and that. I'm like, I did that back in 2004. I bought a 3-bedroom house, or no, a 4-bedroom house, converted a other room to a 5th bedroom, had 4 roommates. They paid my mortgage. I lived in the master bedroom. It was great. I made 4 people share 1 bathroom, and I had my own with my wife, so it was great.
So after working with that startup opportunity, what was the next phase for you?
So I bounced around a little bit. I went, wasn't happy working with him. So then I had some friends, and they were starting a branch of Windsor Capital. I don't know if you remember that name, but you could kind of start your own mortgage branch pretty easily. I went to work with them for a little bit. Wasn't doing as well. Had my license, did like a deal here and there. Then I kind of went temp work. I worked at Washington Mutual at the lock desk for a moment. And then I became a loan officer assistant because I would say my footing wasn't as solid as I thought it should have been. So I went and worked as an assistant for a loan officer, and that was through the crash, right? So that was through the 07, 08 crash, come around 09, 010. Business is starting to get back up, had a second job, had to just kind of scrounge to make ends meet. But I really excelled working for this gentleman, and he was inside of a real estate office. So he was with Prudential. And so I really got a better understanding of what real estate agents really work through, what they're really looking for, what their challenges are, et cetera. And so in working through that and working for him, I really started to build my own base of referral clients, et cetera. I actually wanted to be his partner, but then he was like, no, this is my business. You're my assistant. I pay you, not the other way around. And I said, okay, well, I need to go and find something better. Oh. And so then I applied to a bank here on the West Coast. It was Union Bank. It was Union Bank of California, and then it was just Union Bank, but it was just on the West Coast. It was a portfolio jumbo lender. And then I stayed with Union Bank for 10 years, and I really excelled my career. Again, I started as an assistant, then I became an actual loan officer, my own loan officer. Then I became a producing sales manager, so I was managing a team of loan officers. And this bank primarily dealt in the jumbo space. We offered interest-only loans and jumbo interest-only loans with a 40-year term. So a lot of creative financing, a lot of creative math that went into like how to sell the product and how to make who it was really good for. And I really developed an affinity for dealing with really complicated tax returns.
Yeah.
People with 35K1s and S corps and C corps and all that good stuff. Depreciation is the king, right? Depreciation is the key to all wealth, because if you add it all back, you really have income even when you're not paying taxes on it.
That's right.
Yeah.
So
And
when you're working there, are you getting a lot of your clients through foot traffic, through people calling in, or is it where you're having to go source the business?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So it was great. Union Bank was awesome because the branch network was huge. We had a very big branch present, brick and mortar locations. And because our product, this 40-year interest-only loan, was so unique, we just had this huge reputation as a bank. Brokers could send their jumbo deals to us, but as the bank being on the retail side, we were 0.25% better. And so it was so organic and natural at Union Bank. It was such a great institution to work for. And when I started there, it was really interesting. When I started there, they literally did not offer FHA. They didn't do VA. They didn't do a Fannie Mae 30-year fixed product. They had none of that. They just had their jumbo product, and they had a CRA portfolio product, and that was it. And then gradually, between 2010 to 2020, they expanded. They built out Fannie Mae. They started lending in more states. They did FHA. I got to grow with the bank, and it was just a great experience for my career.
So working at a bank, was this something where you were feeling like, wow, I'm getting really kind of the meat and the bones of being a loan officer. I'm in charge of so many different. You mentioned all the Fannie Mae, VA, FHA, and so you're seeing all these things, and you're in charge. You're in charge, right? So, are you at some point feeling like, wow, this is what I want to do, and definitely this is my spot? Or are you looking at, well, how do I do this maybe, differently? What was your thought process while you were working there?
Yeah, it's you can't bite the hand that feeds you, first of all, right? So you have to, everybody has to really, I think, reflect on, okay, really, where am I getting my business? Who is driving this business to me? And of course, I was approached by, oh, come work for us. We'll pay you this. We'll pay you that. Other banks, this and that. But I really gravitated to the mindset of, look, I like being able to sell something that nobody else can sell unless they work where I work. I don't like, competition's a good thing, but to me, and I don't mean to offend anybody, but brokers are a dime a dozen, right? Every broker out there, they're always racing to the bottom on interest rate. And they're all just selling, well, service, and I'm the best service, and I service. And I think service is super important, and I value that, and I value relationships. But the consumer is what's important. And if you can provide the consumer something that they can't get anywhere else, you're going to get more opportunities to win business.
No question. No question. Moving from Union Bank, what was the next phase for you?
Yeah, so unfortunately, Union Bank got purchased by another bank, which was U.S. Bank. And U.S. Bank is a much bigger corporate monster. And U.S. Bank didn't like how many loan officers were doing the type of business. They got rid of that unique 40-year interest-only product. COVID happened. So a lot of things just kind of all happened at once. I kind of made the conscientious decision. I need to find a new place to be. I need to find a new thing to do. Fortunately, I'm in the phase of my life where I have some success. I can take some more chances. I can take some more risks. And so I kind of reinvented myself 100%. In the sense, I went from working with mostly jumbo affluent borrowers to now I really, really specialize in helping people achieve the American dream, whether it's buying that first home, buying a second home that's, a move up from a condo to a house. And so, my average loan size used to be like $1.5 million. And now my average loan size is probably right around 700,000, which in San Diego is entry level housing. So I really have redone my whole image and everything I do around trying to help people get into a home in the most affordable, cheapest way possible.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Before we hopped on here, Clay, you mentioned there's an opportunity for people where the mortgage provider is actually potentially losing, and I wasn't aware of anything like this. Where basically, it's not as many fees. Dive into that, because this is an interesting topic for me. I was unaware that anything like this existed.
Yeah, so there's a federal mandate that came out in the 70s. It's called the Community Reinvestment Act. And basically every real estate agent should have or knows the term redlining, which back in the day, there were some very unethical practices where banks would be like, well, we don't want to lend in that community because there's not the right people of color, or their income levels are too low, or whatever. So they basically they would steer people into certain communities. And then NAREP, which is a big organization, they fought with Congress, and essentially the Community Reinvestment Act was passed. And basically the Community Reinvestment Act says, as it applies to mortgages, that banks have to prove that they are adequately serving all the communities that they want to work in. They cannot discriminate for any reason, and they have to provide and prove that they are providing loans to underserved communities. It's almost reverse redlining. I'm not going to actually use that term, but I did, I guess, just now. So the Community Reinvestment Act says that banks cannot grow if they cannot prove that they are lending in all the areas that they want to work in. Naturally, it is really difficult for banks to compete in those communities because the brokers dominate. We have brick and mortar locations, we have expenses, we have one avenue to send our FHA conventional VA financing through. Brokers have 10, 15, 20 different avenues to send conventional FHA and VA deals, which are the primary product that are used in these communities.
Yeah.
So if I'm competing on a conventional FHA loan, unfortunately, I'm probably going to lose. That broker can race to the bottom. They can cut me down by whatever amount, fee, et cetera, and they'll win that business. And that's the consumer's making the right choice. They go for the cheapest, best product. That's what they should do. So in order for banks to meet their CRA requirements, we can only meet them in one of two ways. One, we can buy all the loans that those brokers did at a premium and spend a bunch of money just to buy and service those to prove that we have them on our books. Or we could develop a product that we can get the business organically in those communities. And in order to do that, that product has to be head and shoulders better than anything else. And so my bank now, we currently have a unique product in our CRA portfolio. The summary of it is we provide the buyer the ability to put just 3% down. We pay all the mortgage insurance. So we pay all the PMI for them. There's no origination fee. And on top of that, we don't apply any what are known as loan level price adjustments, which any lender knows that when you price out a loan, the credit score, the loan to value, the property type, all those things affect the cost of that rate on that given day. So we take all of those out. So what that means is every single person, whether they have a 620 FICO score, 720 FICO score, or 820 FICO score, they're going to get the same rate sheet on that day. Whether they buy a condo or a house, it's the same rate sheet on that same day. Whether they put 10, 15, 20% down, it's the same. So even when I'm doing a loan with somebody putting 25% down, but they maybe have a 680 FICO score, if it's a CRA eligible property, I'm going to have the best product.
Wow. I was never aware of any of this. So is this specific to San Diego, to California? Is this across area? I'm in Texas.
Yeah, so my bank, we do loans in Texas. In Texas, everything west of Texas, basically. So Texas, Colorado,
Hmm.
Idaho, Montana, and then everything west. We don't do Kansas or the Dakotas, but everything west.
So this is so niche. I was completely unaware, and I'm always pleasantly surprised when I have these conversations because it's like, wow, amazing what's out there, right? So, uh, is this something that the bank that you work for effectively created this
Yes.
process, these systems? Because I've never heard of this before.
Yeah, so CRA products are not unique or original. They've been around forever. If you remember, I said when I worked at Union Bank, they had a CRA product, right?
Yeah.
They also had it. It was called the EOM or the Economic Opportunity Mortgage. The difference, and to the same point, Citibank has something similar. U.S. Bank has something similar. Every big bank has a CRA requirement. They all just get to pick and choose how they want to fulfill those CRA requirements. And now I'm sure you maybe worked with down payment assistance programs, right? Like,
Yeah.
and a lot of people get this misconception that, okay, well, yeah, but there's going to be a bunch of loopholes, or there's going to be a bunch of restrictions, or I'm not. What's the catch?
Yeah.
And so there are a few of those, right? And so when I've been saying the word CRA eligibility is the key, right? And so what defines a CRA eligible property, right? So historically, and most other banks or every other bank that I know of, they define a CRA eligible property as an area where the income in that area is less than 80% of the average. So if you think about that, I'm going to use the word the ghetto, right? So if you think of a low income area, right, that's an area where the income is not very high compared to the rest of the community or the rest of the county. However, what's so great about my product is we added a second level of what makes a CRA property CRA eligible. And this is the game changer and why I work here. Because if you think about it, if I go to a buyer and be like, well, you can get this amazing product, blah, 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 but you got to buy in this area with a high crime rate or low income, and it's not very nice. I don't want to live there. I don't care how good the deal is. I don't want to live over there, right? What my product allows for is we took the secondary piece of it and we said, okay, we're not just focused on low income areas. We're focused on areas that are mostly minority majority areas, places that are greater than 50% minorities. Follow me?
Yeah.
Okay. So every year, right, the census, they send out this data. They ask you, what's your income? What's your nationality? What's your ethnicity? And so it's public data as far as what areas have more than 50% minorities living in them. And so here in San Diego, we have Chula Vista is a very large part of San Diego. And then East Lake is a very affluent area of Chula Vista or east of Chula Vista, but it's very high income. It's 140% of the median income. These are places people want to live,
Yeah.
but it's more than 50% minorities. So I could still do my loan without any income restrictions or anything for a buyer buying in that area.
In Chula Vista. Wow.
Right. So like even
Wow.
where I live, it's really funny. Everybody's heard of La Jolla, right? La Jolla is like the crown jewel of San Diego. It's one of the wealthiest neighborhoods in the United States, if I'm not mistaken. Just west of La Jolla, where I'm sitting right now, is called University Town Center.
Uh-huh.
Very affluent area, very, very wealthy as well, right by UC San Diego. UC San Diego, a lot of those students live in UTC.
Hmm.
There's a lot of minorities that go there. Thus,
So it's
UTC is an eligible area.
it's the demographic and it's the median
Income.
income. The
Either or.
either or.
Either
Wow.
or. Yep.
Okay. I would imagine in California there's a lot of areas that would qualify.
I got maps to prove it. I
Is
can
it
I can pull up a map right now and show you all the minority majority areas across the whole United States.
is there
It's
a
all
I'm imagining, I mean, I don't know. I'm ignorant to all of this, but I'm just thinking out loud here. Is there like a limit or a number that a bank will say, we can only do a certain amount of these, or is it kind of, open-ended as far as how many they can
no,
do?
no, great point. So yeah, my bank allocated last year it was something like I don't know, a couple $100 million. And then this year we've allocated, I think, 3 times that amount. I don't want to give the exact numbers, but yes, the bank chooses to do these loans. We don't have to do them by any point. point, we could cut it off at some point. But I think at the end, right, if I went back to what's the other way to meet our CRA requirement, we either got to do them organically or we got to buy them. Well, if we're doing enough of these, people are going to want to buy them from us. So I think it goes to the point of what's bad, what is good for the consumer is what's good for the consumer. And if this loan can help people buy a house, that's all that matters. So yeah, for sure, it could come to an end at some point. I don't know when, and I don't think that's going to happen, but it could.
You mentioned this is so novel to me. This idea where independent of score, people are getting similar rates.
Mm-hmm.
Is this specific to California, or is this, I'm in Texas? Do you know if it's nationwide?
Again, it applies to anywhere we do loans. The same guidelines apply.
Same guidelines. Wow. I'm completely shocked that I'm not familiar with this. I mean, of course, I've heard of the CRA when I got my license, and I studied for that, but I was unaware how it impacted on the lending side. I feel like that should be stressed.
Believe me, I'm trying, man. I'm one of only a few loan officers here in San Diego, and again, I go back to the heart. My biggest challenge, we talked about this before, my biggest challenge is getting people to listen and understand this, because the conception or the perception, I should say, from a lot of real estate agents is, I don't need anybody. I got a broker. He says he can do everything. It's just not true. It's just not true. Like, I can't do everything. Neither can they.
100%. I mean, I think there's people who specialize in, military relocation, there's other people who, I had a guest on the show explain to me, basic housing allowance, that someone who just enlists and then 3 months later, they're pretty much able to buy a house. I was like, really? And she was like, yeah. I was like, how come I didn't know about that? And now you're explaining to me basically, even if your score isn't 800, you're qualifying for certain rates that the 800s would qualify for potentially. It's the same type of thing. And I'm like, how come I didn't hear about this? So I to your point, Clay, I think having someone on the lending side who's in your pocket is a huge game changer, because I mean, you go to one person and they might literally have no idea what you're talking about when it comes to that. And they might say, well, that's not possible, or we don't do that. And then you think, I think you probably have this experience quite a bit. You probably have people coming to you saying, oh, well, I couldn't qualify, or, I just figured it wasn't possible for a long time. I have to work on X, Y, and Z. Whereas actually, if they kind of approached it like almost a networking or a sales process, where they're like, I'm going to talk to a bunch of lenders, they might be able to get it done.
Well, and with real estate agents, I just don't get it. I'm like, look, I'm giving you an opportunity to close more deals. Why would you not want to talk to me? Why would you not spend 15 minutes talking to me, or let your client spend 15 minutes and let them decide for themselves? I approached a real estate agent recently, and she claimed to be a big buyer's agent and talks about creative ways to get things done, yada yada. I was like, look, I'd love to just talk to you. And then she looks at my card. She's like, oh, you work at a bank. You don't work on the weekends. I'm like, yes, I do. I sit at open houses. I answer my phone. I work on my computer. I work on the weekends. I do what's necessary. Oh, but your corporate people don't work on the weekends. And I'm like, nobody works on the weekends. Escrows don't work on the weekends. Title companies don't work on the weekends. What are you talking about? She was just blowing me off. So whatever. That's to her loss. Move on. Right. So all we can do is try. All we can do is make the phone calls and make the presentations and just keep hustling.
Yeah, I mean, I would just say, those other people don't work at a bank. So who do they go to when, these issues arise? How are they getting their information from, right? It's their broker. How big is the broker, right? Clay, we are coming up on time here. Where can folks go to get a hold of you?
Yeah, absolutely. So I use my cell phone specifically. That's my biggest number. Phone number is 619-708-0876. You can also email me at clay.sheffrey@calbt.com. I also have an educational website I built. It's just educational. A lot of the information about this product, and that's www.diyMortgageLoans.com.
Clay, thank you so much for coming on the show here today.
Thank you, Dylan.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.